The cost of home ownership can be overwhelming, and with the added expense of stamp duty, you might be caught off guard if you're not prepared to pay the extra cost. But the New South Wales government has a solution to ease the burden: the First Home Buyer Choice Scheme. Hi everyone, it's Tuan from Tax here with another video designed to help you become a smarter property investor. Buying your first home, you'll need more than a deposit. On top of expenses like mortgage registration fees, conveyancing costs, and moving charges, there's a high chance you'll be fitted with a stamp duty bill too. Stamp duty is a tax levied on property transfers in Australia. The buyer pays it to the State Office of Revenue, and it's calculated on the purchase price of the property. The amount of stamp duty you'll need to pay will vary from state to state. For example, in New South Wales, on a $920,000 property, you're looking at paying around $36,500 in stamp duty, and in Victoria, the same amount would put you back an extra $50,000. So, it's a pretty hefty financial burden, especially if you had to save up for years just to be able to pay the deposit on a property. But today, we're going to be talking about some exciting news for first-time home buyers in New South Wales. As you may have heard, the state government recently announced some changes to the stamp duty payments that could relieve this burden. So, let's dive in and see what this means for you. Starting from the 16th of January 2023, first home buyers now have the choice between either paying the lump sum before the transfer takes place, as you would have before, or paying an annual tax. So, if you were to opt in for the annual fee, you'll be paying a rate of 0.3% of the unimproved value of the land, plus an extra $400. Think of it like the unimproved value of the land as the value of it before anyone built anything on it. If we use the same $920,000 property example, you can now pay 0.3% on $360,000, which is the unimproved value, plus $400, which adds up to $1,480. Now, the terms of this arrangement would be that you'll continue paying this fee as long as you use that home as your main residence. When you sell the property, you'll no longer have to pay the annual stamp duty fee. Something you'll also have to keep in mind is that the New South Wales government will continue to index the tax rate each year so that they're in line with the average annual income, although the year-to-year increase will be capped at 4%. If you're thinking of the First Home Buyer's Choice Scheme as an option, you'll have to meet a few criteria. Firstly, you must be either a permanent resident or an Australian citizen. Secondly, the scheme won't apply to properties that exceed $1.5 million in value. And thirdly, you must move into the property within the first year of owning it and live in it for at least 6 months. If you decide to, at some point, after living in the property for 6 months, turn the property into an investment property that you rent out, your stamp duty rates will increase. So, instead of 0.3%, you'll pay 1.1% on the unimproved value, and the additional fee will be $1,500 instead of $400. So if we go back to the same example earlier, your annual fee on the $920,000 property will be $5,460. One more thing that I'll mention is that although the scheme only officially became effective in January of this year, the New South Wales government made the announcement back in November and said that if you made any property purchases between the 12th of November 2022 and the 15th of January 2023, you'd be able to apply for a refund of the stamp duty you've already paid. Now, I'm sure you're wondering if this is the more cost-effective option, but the answer will depend on the context in which you're buying the property and what your strategy is. For example, if this is for your forever home, paying an annual fee each year might be more expensive in the long run, but it's a good option if you're strapped for cash. If you plan on turning it into an investment with the hopes of growing capital and selling within 10 years, it's probably also going to cost you quite a bit more over the span that you own the house. But again, if there's a great opportunity in the market now and you just don't have time to save up for the upfront lump sum, you'll have to weigh up the pros and cons of the annual tax or wait for another opportunity to come along. Now, if your plan is to buy it, live in it for a short time, and then flip it and sell it, you can consider the First Home Buyer's Choice Scheme because it could actually save you more money. Of course, this is just general advice. You should get specialist advice from an accountant who knows your unique circumstances, but these are all things you need to consider. Another thing to consider is that as a first-time buyer, you may also be eligible for stamp duty exemptions, which will waive the fee altogether. For example, based on the First Home Buyers Assistance Scheme in New South Wales, eligible buyers can apply for an exemption if they're buying newly built homes up to a value of $650,000. So remember to keep that at the back of your mind too. Otherwise, that's it from me on this topic. I hope you gained some insights to help you decide which route to take when buying your first property. But if you have any questions relating to the new stamp duty regulations or would like to organise a stamp duty valuation from a certified practicing valuer, please feel free to contact us or reach out in the comments section. We'll be back soon with more tips and tricks to help you navigate the property market. Thanks for watching.